If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills. Because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
Pedro, I've been waiting to talk to you. Great to have you back. I also want to congratulate you on reaching a milestone at MNI. How are you, buddy?
I'm good. Thanks for having me, Dale. Good morning.
Oh, yeah, it's great to have you, Pedro. I was wondering if you might want to share, and we could talk on camera. If not, it's no big deal.
Oh, you know what? I'm not set up for it this morning, but
that's fine. I'll come off and we'll scroll around some charts. So, Fed next week, Pedro. Your
yes, sir.
expectation and what you're hearing from your sources.
Absolutely. So, I mean, the main thing is that what we're trying to game out is how much signal we're going to get in terms of how strong a signal about a September cut we're going to get, right? The market has
Okay.
certainly coalesced around the idea of one, but there hasn't quite been unanimity within the committee. It's certainly not in the FedSpeak. Even some of the normally dovish Fed officials have remained pretty vague about timing. People like Adriana Kugler talking about later this year. Same tone from Mary Daly at the San Francisco Fed. So really watching for how much coalescing there is around the September idea. And it's really about how much of the message they managed to put into the statement. Like, did we get some kind of hint in the actual forward guidance that September is in play? Or is that something more that we might pick up from the chairman during the press conference, which would be kind of less of a strong signal that September is a done deal?
Okay. Well, the market has given signs of soft patches with commodities have been under pressure.
Yeah.
Equities, especially high valuation equities to Max 7, really taking it on the chin, trying to hold here. To me, it looks like the NASDAQ has peaked and rally should be sold now. Could there be enough justification the way some of these asset markets are acting that they're reflecting a soft patch and Powell sees it and he's ready to go? And do you think that he might surprise the market in July?
Definitely no surprise for the market in July in terms of a surprise cut. I would say the chance is almost nil. This is not a Fed chair who likes to surprise. I think
Okay.
if they were a nimble old school Fed, they probably would be cutting in July because, as you suggest, there's certainly enough of a soft patch. With a lot of the conversations I've been having lately are really, it's not about how much softness there is. It's really about how far you are from neutral. The more inflation goes down. So even if you think neutral is a lot higher than it used to be, which a lot of people do, a lot of people think the neutral rate has risen. But even if you do, the sort of top end of neutral is in the mid to high threes, and we're at 5.5. So if you want to get closer, if the economy is getting closer to balance, as the Fed likes to say, you need to start making your way toward that. And you hear a lot of intelligent voices arguing for that. And so I think that's where the debate lies. Also, I would say that the bar for the Fed has been lowered a little bit in terms of what they need to see for cuts, and that's in
Yeah.
part because of the deterioration that we've seen in the labor market.
Yeah.
It's not that it's falling out of bed, but we've seen enough of it to give them pause and enough of it to justify kind of moving despite a somewhat higher inflation rate, if that makes sense, if you're taking both sides of your mandate into account. And we're also going to be looking for signs of that in the statement. Is the Fed going to say something to the effect of it right now? It just says it's highly attentive to inflation risks. It could potentially shift the language to say it's highly attentive to inflation and labor market risks. There was certainly a shift that we picked up in the last big speech by Chris Waller, Governor Waller, who made the point that employment risks are the highest they've been in a while. So I think that's a part of the mandate that the Fed hasn't had to worry about for a while, but it's starting to do so, basically.
Yeah, and there are people like Sinclair. I went through your stream, Pedro,
Yeah.
and Sinclair is a former Fed official.
She's she's a former Fed visiting scholar, but most recently she was Deputy Assistant Secretary for Macroeconomic Policy at Treasury, like until last month,
okay.
basically. She had just stepped down when I spoke with her.
Okay.
And yeah,
She
and
thinks he's late already.
yeah, she's not alone either. That's been
Yeah.
increasingly the tone of the interviews that we've been picking up, is that they're falling a little bit behind the curve and that they might actually have to catch up, be playing. Julia Coronado, whom I interviewed this week for one of the episodes of my FedSpeak podcast, she had a
Yes.
similar tone that basically they might be playing catch up essentially by the time September comes, if there's a significant pickup in unemployment between now and then. And so,
Okay.
I think what strikes me, Dale, is really you asked me where the dollar is going to go. I have no idea. But the
Okay.
range of outcomes macroeconomically is still so wide to me, and range of possible outcomes, that is.
Yeah.
Yesterday we had an upside surprise on GDP, right? So growth
Right.
still appears to be strong, and it wasn't like a sort of fluke upside surprise. Consumer spending appears to be like actually strong, right?
Right.
Employment appears to be strong by many accounts, but it does seem to be weakening. So you could envision scenarios all the way from inflation is sufficiently bumpy this year that maybe the Fed doesn't get a consensus to cut, all the way to the unemployment rate might be ticking up to like 4.3, 4.4 in the next few months, and that gets the Fed doing 50 basis point cuts by year end, right? So that's kind of the range of possibilities that's
How
on
about
my
this,
radar at the
Pedro?
moment.
A lot of these people were calling for what they're afraid to call for this year, last year, and they were pretty embarrassed, and they didn't take into account all the money that was poured into the economy fiscally and monetarily. And
Yes.
the economies, and that was, they'd never come up with analysis post pandemic because they're not over 100 years old writing these articles.
Yeah.
So a lot of people got it wrong, right? We were going to have recession last year with the rate with the Fed tightening. You imagine if that cycle was one of the fastest in history. Maybe Volcker was faster, but it really didn't have much of an impact on anything,
Yeah.
including, in my view, inflation. They say is subdued, but you don't need a used car, right? You may eat
Yeah.
in
I
it
mean,
because you
you could
can't pay
argue
the
it didn't have it.
rent.
I don't know about
Right?
it didn't have an impact on anything, but I think it had less of an impact than everybody thought it would.
Yeah,
And
yeah,
I think that maybe the lags are even longer than people thought because of the lock rate effect that exists in our economy and not in
yeah,
others.
yeah,
So maybe now we're feeling the pinch, and I think that's the worry, is that maybe, is the bulk of the effect being felt now, and are firms finally starting to pull back, and is that what's happening and filtering through to equity markets and so on? So there's a little bit of fear and trepidation again out
yeah,
there. Is it presaging an actual recession this time? It's hard to say, right? Nobody's gonna
yeah,
answer your point because everybody made that call so boldly and so erroneously. Everybody's kind of afraid to make it again, right? So everybody's just dancing around the R word now and just
yeah.
seeing what happens. People just talk about it as cracks in consumer spending or cracks in the labor market.
Do you think that we're going to be able to get off an election? I mean, everyone's assuming we're going to have one because we always have. Are you worried about the fact that, it's really, even if the vote goes through, it's not going to be accepted by either side? Where do you think the presidency is going to be decided? In Congress, the courts, or on the streets?
That's a great and frightening question, Dale. I don't have the answer to that. That's outside of my
Yeah,
guessing world. But I think it's the fact that we have to worry about it.
yeah,
Um,
that bothers me.
puts the fact that I think it puts us. It's part of what makes the U.S. debt load suddenly worrisome.
Yeah,
Um, I think it's the
that's a
fact that
good point.
we look more like an emerging market country when you have to worry about political risk of the kind
Yeah,
that you're describing,
yeah,
and emerging and countries that have institutions that are sufficiently dysfunctional for those outcomes to be possible are also institutions that tend to not repay their debts at some point for one reason or another. So I think that's really where the worry comes. It's not actually from the debt levels. Like everybody says, debt levels are manageable. The actual budget deficit's under control for now. It's just on an unsustainable path, right?
yeah. It's just
But it's not the path. It's like the people managing it and the worry that
yeah,
it might be mismanaged in a way that might lead to a quote
yeah.
unquote accidental default.
Would part of that be that I heard, was it Treasury considering using clearing in the UK rather than in the US? Are you familiar with that story? Because I think Duffy from the Merc came out, and it's the most emotional I've seen him. He's been, chairman, or maybe he's a post chairman for a long time, but he was definitely upset about moving the clearing of treasuries to under the supervision of the UK. Is that a true story?
I did not know about it, but I'll have to check. I mean, yeah, Daryl Duffy's certainly an authority on the issue, and he's also a New York Fed advisor in addition to his work in the UK. So
Okay, well, he's very
he
concerned about it.
he would know.
Yeah, so
Um,
that could be a big story,
yeah,
that we're going to farm off the clearing of our own treasury securities to the UK. I mean, they've had a bad auction before, like the gilt crash,
yeah,
right?
certainly.
Anyway, check that out. Let me know what you find out.
I
I
definitely
want to
will.
huh?
Go ahead. No, I
I
wanted to
want to
mention another.
go ahead.
No, I wanted to mention another interview that my colleague Evan did this week with a former RBI deputy, Viral Acharya, also, attached to the New York Fed as an advisor and a former resident scholar. He's concerned about the risk from private credit in the sense that everybody talks about private credit as existing in a separate universe from the banking system. He
Yeah.
thinks that, if private credit gets into trouble, they'll somehow get bailed out by the banking system, and that premium is not priced into private credit markets and into their
Okay.
banking affiliates in any
So the
way.
shadow
So
banking system will have impact on all the ones that are out in the light.
exactly
Oh,
right.
okay. I've heard people talking about that's where the issues will be. But I wanted to congratulate you on hitting that milestone, Pedro, of 100 podcasts.
Oh,
Um,
thank you.
yeah. So how
I
long did it
appreciate it.
take you to get there in time?
Uh, a couple of years, 2 years and change. So
Really?
yeah,
Okay.
it's been a great run, and still going strong. So
Yeah, and who you celebrated that 100th uh, show has great foresight. I mean,
absolutely.
I'm a Sheila Bear fan, not the Chicago Bears anymore, but Sheila Bear. She saw a lot of things coming before '08, and I even saw a tweet. I think she had a T-shirt on called "The End Game." Did some guy write a book, The End Game? And I don't know
I
who it
think that's
is.
right.
Yeah, and she's wearing that T-shirt. We all want to know the end game, but how about what Sheila is talking about right now that could be, she sees through overlooked issues in the financial system? Is she worried about anything?
To be honest, she's worried about the the risk that is on everybody's radar, which is CRE and regional banks. That was her actual focus. So
Okay.
she thinks that we haven't seen the worst of it, and she thinks that because we haven't, she was worried that because we haven't sorted out the uncertainty around the deposit guarantee, right, and what it actually is and isn't,
Yeah.
that there might be a contagion effect from even kind of small bank failures in the regional sector as these assets become, more impaired and these banks become more overextended. So she thinks small failures, which are probably inevitable, might have outsized financial effects.
Interesting. So here's the KRE. It's benefited. These stocks have broken out with the Russell.
Yeah.
After the CPI, they called the Great Rotation. It was, I
Yep.
think, a four sigma event in Russell. I mean, historic. Um, so here are the regional banks. So if Sheila's worried about them, I'm going to start watching them right now. You know, they look pretty good to me compared to
Yeah.
something like Amazon
Yeah.
or even Apple or Google. I know a guy looking for 140. That looks really bad.
Yeah.
Um, so what are your thoughts about the market? I know the Fed is really your wheelhouse, but your thought about this great rotation, have you thought about it? And you know, the way I thought about it is everyone was bearish the market because of the concentration of money in the Mag 7.
Yeah.
Okay, so they would try and short the market, myself included, because breadth was terrible. But that wasn't successful because the market went parabolic despite it being concentrated,
Yeah.
right?
So people had to
Then,
capitulate.
yeah, yeah. And then we get that great rotation day, and that makes the bears even now after, trying to short a poor breadth market. Well, I'm certainly not going to short a market that breadth is improving and we're having breadth thrusts, and then we
Yeah.
get these semi-historic sell-offs in a short
Yeah.
period of time. I think the market's wrong-footed, and we could have a problem, maybe what Sheila's talking about, and the soft patch that the Fed is behind, and everyone thought things would be okay until the election, that we start having tremors in the financial markets before the election, not on it or right after it, but before it.
I don't know if this equity market is the sign of something like that happening, and it's certainly not the kind of development that would concern policymakers at all, because they look at financial stability risks more from a sort of broader credit or market functioning perspective. So,
They
you
don't
know,
care about the wealth effect anymore of the stock
not
market.
not that I don't think. I mean, they would if it was like this huge, 2008 style kind of secular sell-off. That's when the wealth effect debates start to kick in, not with, a kind of short run, dip after a really, as you described it, a
It would have to
parabolic
be
run up.
like
I think
it would probably have to be something like 30% or so before.
exactly. That was
Uh,
exactly the number I was going to say, because just because round numbers are good in markets, right? So yeah, 30% drop exactly.
okay, well,
So
we're a third of the way there.
yeah, so there you go. I mean,
Okay, so I mean,
but I think if we kept going, there'd probably be enough. There'd have to be enough macro reasons, right? That the Fed would probably have other worries on its plate than the
yeah,
equity market itself.
okay.
And so I think, yeah, for sure we could have financial instability pop up again before the election. I can't identify what it might be.
Okay. Could it
We could
be?
also
Could it
get
be?
financial instability generated by concerns of over the election itself, right? It's
Yeah.
amazing that we've been as stable as we have been, considering an assassination attempt and the presidential candidate dropping
It's
out.
amazing. Yeah.
So that's actually, you could argue the market is maybe hanging in there despite these events. So
Yeah. There are a few canaries in the coal mine with
yeah,
this. I was going to ask you if you make anything out of the 2 and 10 year yield curve almost coming out of inversion, getting closer to zero.
yeah, I don't know what to make of it. I've been asking people about it, people who are smarter than me in curve analysis.
Yeah.
But it would not be inconsistent with the sort of lagged, the same old pattern that we've had in the past, but just a little bit lagged because of the factors that the kind of pandemic
Yeah.
aberrations that we've already discussed, and that that the inversion was signaling a recession after all, but it just didn't come because we had this excess fiscal boost, and now, so it could be that, but I don't have a firm view on it.
Okay. It still looks to me like, I don't know, lower yields coming in the 10 year.
Yeah.
So, okay.
And I think,
Any, and
one of the things that I would say is that I think the recession chances just strike me as lower right now
okay.
because of the politics, because uh, you know, both sides of the spectrum have reason to promise big, and in their first year to deliver big, whatever it is that they do. So, you know what I mean? So it might be through spending on the Democratic side, it might be through tax cuts on the Republican side, but I think there will be an effort to stimulate growth in the first year. And I know a lot of smart people I talk to are actually worried the Fed might have to think twice about continuing to cut rates if there's a significant renewed fiscal boost to the economy at the start of next year. So that adds to the range of
Yeah.
confusing
Or,
possible outcomes that we have out there looming.
yeah. Well, not really. Maybe we have a nice decline in rates, to where, maybe even we trade 3%, and then later in the year things are kicking up, and the multi-year trend for rates is higher. So I mean, to
Yeah,
come back to 3% seems big now, but it was a 0.30 back there, right?
right. No,
So
and keep. Yeah, only going down to three is a privilege for the Fed, right?
yeah,
It's the Fed having won the battle against the zero lower bound if it's able to cut rates and still have room to ease in the event of additional economic weakness. The problem is that uh, even at 5.5, it turns out that on average over history, the Fed tends to cut about 500 basis points over any given cycle. So the zero lower bound is still kind of looming there,
that's a
not too far from the range,
yeah,
and you know,
that's a pearl. Well, our neighbors to the north cut for the second time, and they're having to shore up their repo market. Um,
yeah.
what do you think of that? What's happening in Canada?
It surprises everybody by how dovish they sound, and it has that kind of what are they seeing that we're not kind of feel to it, because there's enough stickiness in inflation that we didn't expect Macklin you know, to
That's
become
their real
that
estate
dovish.
market. People have
Yeah,
3 year mortgages that
yeah,
that are rolling over, and five
that's
years
right.
that'll
Yeah,
roll over in a couple of years. So they're having, people, and I think the consequences of walking away in Canada are much more severe than they are down here in the U.S.
yeah,
I mean, it really affects your life. You can't just hand over the keys and say, okay,
yeah,
I'll file for bankruptcy, and that's
yeah,
it. They go after all your assets if you do that.
yeah,
So they'd be after my
yeah.
$10,000 bank account. So I'd have to stay in my house. So uh, anyway,
All the petty cash would be gone.
all of it, all the coins I've been stacking, yeah, everything like that, Pedro. So what's your
Man.
biggest thing that you're paying attention to, say, over the next 3 months going into the fall? Anything
Um,
overseas or China like, or
so no, I mean, I'm really Fed focused. I'm looking
yeah.
at whether what kind of signal we get from Jackson Hole. That's what's on my mind right now is preparing for Jackson Hole. I'm not going this year. My colleague Gene Young is heading out to the mountains.
Oh,
But I mean,
too
the reason
bad.
I'm
It's
I'm
beautiful.
focused on it. No, it's beautiful, but I've been enough times. It's time
When
to
is
give
the date of
the
Jackson Hole?
next
Because
generation a chance. Uh,
you're like you're Biden of MNI. All right.
it's time to pass the torch.
You're doing it. That
Wait,
torch is heavy. I
does
thought you were going to carry it
does
up
that mean I
in
need
pair.
to? Does that mean I need to pace myself, Dale? Or
Pedro, I say that you and I get rocking chairs and go to Jackson Hole and hang
hey,
out and watch.
but not talk about
We'll hand
monetary
out
policy.
torches.
That's
We'll
my
hand out
problem because I
torches to everyone.
every time I go out there, it's very stressful. It's not mellow in any way.
Really?
No,
Okay.
no, because every central
Yeah.
banker in the world is hanging around, and I got to get interviewed. So it's like the highest stress weekend of my life, and these beautiful mountains in the background, but I don't get to do much hiking.
Yeah.
But
What's the
no,
date?
but the reason I'm focused on it, I don't. It's the second to last week of August, I believe.
Okay, the end of August. So that's when
Um,
he's going to be uh, preparing the groundwork, is what
yeah.
most people think.
Well, and also there's a bigger picture message which is why I'm really focused on it because the framework review is coming into perspective sort of later this year, and that's kind of if he doesn't expect or want to be reappointed, which might be the case for Jay Powell, then this framework is kind of his legacy. How kind of he applies the lessons learned from the pandemic into the future of monetary policy. So just curious to see how far out on the limb they might go and how much they'll change things.
Okay. All right. Well, it was great catching up with you, partner, and
My pleasure,
appreciate it. We'll get back together just before the election, see how things are shaping out. I think we're going to
man.
have a Rod Serling fall. So anyway, if you like Twilight Zone episodes and
Absolutely.
you always wanted to star in a Rod Serling production, whether you know it or not, you're in it.
Yeah, that's a
We're
good
all
point.
in
It's
it,
gonna be
huh?
it's gonna
Uh,
it's gonna be a crazy few months.
all right. Well, uh, we'll get through it because we're warriors, right, man? So anyway, and we'll exploit it. Let's exploit it in the markets. Well, that's what I do. I try and exploit it. So
Well, I'll
by get
exploit it for news. I'll exploit it for
all right.
news.
Well, I think everyone follow Pedro's podcasts on MNI.com. Let me just pull it up for you guys.
Marketnews.com
Yeah,
slash
market news.
podcasts.
Here you go. Oh, what is that? Okay. Here you go. Here's the website. And you can see what section do they find you in here, Pedro?
So if you go to policy on the left,
Yeah.
on the under the Fed tab is all of our stories, all of our content.
Okay. So this is, you want to keep an eye on what's going on, and it's not just the Fed. It's
Oh yeah, we got
everyone.
we got the whole world, and now we've got somebody in. I have my colleague Larissa Garcia in Brasilia,
Okay.
covering both the Brazilian central bank and the Central Bank of Mexico. She's covering the G20 right now. She's in Rio, so we're expanding.
Okay. So it's going to be interesting to see how Trump if Trump gets it, and the president of Mexico, which are from opposite um, philosophies, one being conservative, one being ultra liberal, right? She's
Yeah.
pretty altered. So watch that peso next year. It's going to be some nice trades, Trump trades in the peso. You ever see the cartoon where he's making phone calls about making an announcement about tariffs? And on the
No.
left, he has a bank of phones and charts up on his screen. I would do it too. Anyway,
No
so
comment. No comment.
yeah. Anyway, have a great weekend, Pedro, and talk to you in October. Appreciate you
Sounds
being
good.
here and sharing your sources with us. And uh, let me know when you hit 200.
Sounds great. Thanks for
All
having
right.
me.
Pedro Da Costa, follow him on X at P Da Costa, so you know what the hell, after you listen to Paul and you don't know what the hell he has said to you, Pedro knows how to interpret that foreign language. So go check him out. And that's going to be a wrap for me for the week. TGIF, everybody. Don't just count your pips, count your blessings. Do your work. Have a plan for next week. Fed next week. BOJ. We have a lot of stuff going on next week. Hope you had a good week and enjoyed gravity in the stock indexes. Yes, Isaac Newton, it still exists. And don't just count your pips, count your blessing. Adios, Scott. Nice to see your name there. Marcus, you're welcome. Pedro, thanks again. And we'll see you on Monday.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.